Guess what day it is? Guess what day it is? It's Hump Day, baby. Welcome, everybody, to the Hump Day edition of Daily Market Commentary. Hope everybody's having a great day. We are going to do what we do each and every day, looking for potential breakouts and reversals in an educational perspective, identifying good trading opportunities as they show their pretty heads. If you're new to the channel, do me a favor, click the subscribe button, hit the notification bell, hit that little thumbs up thing in there. That would be a lot. And then maybe even the share button to share this video with others so that they can join us in the party. Okay, let's go ahead and get rolling on our session. Let me shrink my head here. So yesterday we looked at the ES for a potential move out of this region, and we, like I said yesterday, it was December 1st of 2020, and that's kind of how this breakout treated us. It didn't really fall apart on us, but we got a breakout, and then towards the end of the day, it just kind of said, "Listen, I'm not going anywhere. You should probably just get out of me at break even." And that's kind of what happened, right? It gave us our 6 candle rule, 1, 2, 3, 4, 5, 6, before hitting where our stop out would be down in here. And so it gave you an opportunity to get out at break even or minus 1 or 2 points. It just didn't come to fruition. Now, since we weren't able to come to that fruition and really, show that thrust higher, we could theoretically see a little pullback before then moving higher. We did put in an all-time high, a brand new all-time high, and so the new all-time high was eclipsed, and I think that we're still going to trade higher. I'm not changing my overall bullish sentiment, but I think that we want to look to see what's the pullback area look like as well. Our 4-hour trend by no means has slowed down or stopped, but our 1 hour, we may have some reversal areas down here for us to pay attention to. So when I go to the 15-minute chart, the most obvious is this one right here, the origin of this move higher. Not a great time of day. I like the area a bit lower than that. Let's grab the wrong tool. I like the area a bit lower than that, right here at 36.15 by 36.11. So I think that may be a better area to look for and a better opportunity. Theoretically, if we even base right in front of the level that we are on right now, we could see price give us a little bit of a breakdown from this region below 36.42. I could see that. I could see that playing out today as well. Now, overall, our big picture trend is still up. And so anything you take short, you got to be a little bit more cautious of. But definitely a pullback to here would give you a good entry. It's definitely showing that our momentum is slowing down a bit, but I'm okay with that. So Paul says my stream is fine. So no, it doesn't. Oh, there we go. Now it should be better. Looks like it dropped me for just a moment, and then I came back. So let me know if you guys can all hear my voice, see my screen. So it looks like I may have popped off. Oh, it's fine. Okay, great. Just wanted to double check. All right, because it jumped off for just a moment. My feed shut down and then it turned back on. So maybe that was the issue. Totally fuzz. Well, maybe it'll be good now. So we'll see what happens now. Looks like we should be okay. All right, so let's move over to the Nasdaq. Same thing in the Nasdaq. We did actually get a little bit more of a run on the Nasdaq breakout from the more aggressive one yesterday. If you took the more aggressive one, you did get a little run outside of that level. If you took the less aggressive, then 1, 2, 3, 4, 5, 6 candles later, we were right back to where we started. And so both of our breakout trades showing me a little bit of weakness. Now, the Nasdaq, we did also in the Nasdaq set a new all-time high, but just barely, right? So when I look at the Nasdaq on a 1-hour time period, and I'm looking for a potential pullback, I still think this is my best one right down here, this 12,204. So nothing really has changed on the hourly level for me to add on the Nasdaq. I don't think I would also add much on the 15-minute level either from where we were yesterday. Now, I do think that we could see price coming down to that region, provided I get enough basing somewhere in here, right? Let's keep an eye on this line because this line is an old area of resistance. Old resistance, as we know, oftentimes acts as new support. And if we base in front of that support and break down through, then we can drop. Okay? I didn't know Control R would do that for you. Oh, it's a reload. Got it. All right. Next, Russell. So our Russell level yesterday, so our 15-minute area of demand, we got a little bounce off the first level and then a decent little move away before then price coming right back down into the level. So it was not a great trade. It probably got you out, maybe for a little profit, maybe a little loss, maybe a little break even, somewhere in there. Where the better trade yesterday was our one that was lower on the curve, closer to the pivot, as people would say, that the curve. And remember that all this is happening in the context of the fact that we were in a little bit of some sideways price action, right? So we did get a little bounce off of the lower part of our range. The second time in, we bounced up less. The third time in, we bounced up less. What does that typically tell us? When we hit it once, bounce away more. Hit it set twice, bounce away less. Hit it 3 times, bounce away less. We're bouncing away less each time. That is a picture-perfect example of a potential breakdown. I mean, that's what we want to see when we look for a solid breakdown setup. Now, if we don't get that breakdown, look for a potential reversal off of this level. You might even have one up here. So those are kind of levels on top of levels right there. But it's definitely showing a lot of weakness, a tremendous amount of weakness in the Russell. And the Russell sometimes is the canary in the coal mine for our other markets, right? Not always. The Nasdaq has to follow for it to really be, the leader of the family. But I will say that this demand level below us is less probable due to the basing that we're getting in front of it, right? If you think about it, that demand level, if I were to take this demand level, my stop has to go below this wick. So that's my risk. I don't think that I even have a full 1-to-1 reward to risk on this trade, right? Based on that area of demand. So I'm going to remove this demand area and allow to trade to the downside. This would be maybe a first profit target for the Russell. Maybe take a little bit of money on the breakdown off the table, especially if you take the breakdown on the 15-minute chart and you've got a small pivot closer to this 1823. And then the Dow Jones yesterday, same thing as all the rest of them. We did get a little bit of a breakout above that line. 6 candles later, we've gone nowhere. Price then came down to our 15-minute area of demand in the afternoon. And when we got to that area of demand, we hit it. And then it kind of basically went nowhere. 1, 2, 3, 4, 5, 6 candles later, we were still inside the level. And so it basically told us, hey, listen, this ain't happening. Just get out. And now also, like some of our other markets, could be giving us a good breakdown line below this area. So we see a number of different levels on here that could work for breakdowns, by the way, in the context of a bigger picture upward trend, right? So we're still in a context of a bigger picture upward trend in 3 of these 4 markets. The Russell, I would say, has gone sideways. Possibly even a downtrend. But all the rest of them are still kind of a bigger picture upward trend overall. So just also keep that in mind. And yes, your stop above your stop would go above the pivot on the breakdown for the Russell or on the reversal, right? On this reversal, your stop would have to go above this pivot as well. So if you want to take this, remember, this is not as highly probable as the breakdown. The reversal is not as strong as the breakdown, but it could be a decent entry. Ooh, excuse me. All right. That one came on me suddenly. All right, so let me share this grid for you. All right. So next market we will move over to are the commodity markets. So starting with the energies and metals, we talked yesterday about this wider level. If you wanted to look into the IC yesterday, about the fact that if we get below this blue line, you may want to still take the breakdown in the midst of doing the iron condor. So if you were so inclined. Now this breakdown did give us a little move away. It's now come back to the retest. I think that our better chances for price to continue to go down, although we do have a pretty decent area of demand below us. So that area of demand below us is this little rally-based rally before a very strong move higher. Now, I'm not a fan of the fact that we came close to it and didn't quite get in. We got to move away in the overnight. So the fact that we came close to it without getting in means that I need to switch it to a confirmation entry. So after we switch that to a confirmation entry, your next level of demand below that wouldn't be for a while. There's not a lot of great demand. I mean, you've got some support right here at 43.08, so I could see us poking below this demand area and reversing on there back up. But ultimately, I think you're better off looking on the short side for right now. On the 4-hour trend, we once again just kind of looks a little like the Russell, right? In that we've started to come down a little bit. Not a lot of huge momentum to the downside, but we definitely have started to come down. I want to throw a quick RSI on here, and we're still in between kind of these ranges when I look at this, but note that we came back down to these areas of demand, and while we came back down to these areas of demand, we didn't get much of a bounce off of these levels. We're coming into this one. If we come into this area of demand and we're sitting somewhere down around this 40 range, that might tell us that there is an opportunity to get us a little bit of a, if we're a little bit on the on that oversold side, let's see if we come back up from there. That would be an interesting look, because I will say that these swing lows are a bit lower. These swing lows are about the same, so we're seeing a little bit of bullish divergence actually in here when I look at this overall. Lower lows, roughly the same lows. So if we come all the way down to here and we get a low that's somewhere right in this region, that's actually a potential for price to move up a little bit more regular. So Dion, what about Globex trap in all capital letters? I do love Globex traps. So it could set up for a Globex trap. If we get below the Globex low, a lot of people step in as buyers, and then that becomes an area of demand. So I agree. I think that could be a good setup. It is a Globex trap. It would be a Globex trap setup for a longs as a bear trap, and it works with our momentum indicator. So then why am I making it a confirmation entry? Because we came close to it without getting in, and those are the rules. Thems is the rules, and the rules is the rules, and I got to follow them rules. All right. Next, gold. So looking at gold, we moved up pretty much all day yesterday, caught a little bit in a base, and so the little basing that we got yesterday in the evening pulled back, and now we've come back to that base area, and I'll be interested to see if that's enough for us to rally off of. Now, there's room for price to go higher off of that level. So if you're so inclined and you want to try a candle-to-candle long, I'm okay with it. I'm okay with a candle-to-candle long at this level. Where I think you could get an opportunity if you're so inclined, you get a bounce off of this candle-to-candle long area for price to run a bit higher. And I'm looking primarily at the fact that that's a decent little reversal candle to retest this pivot right here for price to continue to go higher. John says, I saw 2 60-minute wick over wicks long in gold and waited for lower. Not in tears that the first is working, but wondering if that was the high probability trade or overcautious. So are you talking about this one right here, John? This wick over wick right here? I won't get it. Oh, no, just now. Oh, this one right here, John? Okay, good. So I was going to say, because this one here, I certainly wouldn't have taken on this retest because we'd already hit there once. So no. This one's actually fairly clean, and if you didn't take it, it's due to recency bias, right? Because it was just formed, but it did create a pretty good move away. And so the recency bias that we have from this level might keep you out of it. And, don't be, like I said, I like your line. Don't be in tears over it. I mean, it's a decent little move up. I think there's plenty of room for price to keep going up. And I don't think you were overly cautious. I think potentially a little more cautious than you needed to be. The other side is this was formed at a great time of the day. right? When we look at that, that's formed right at the UK, right at the London Open. And so formed at the London Open is going to be a really good opportunity for the reversal as well. Not frisky enough. I think John is as frisky as he needs to be. All right. Nat Gas, we're going to continue the same trade that we've been doing all week in Nat Gas. The nothing trade, right? This trade is really not giving me much to go off of, and so I'm not going to go anywhere. So nothing to add there. Move along, people, move along. Copper, looking at HG. And so, I don't know Justin's friskies. I must have missed Justin's frisky session yesterday. You talking about in his options session, Liz? Because I missed it. I didn't join. All right. So here we have this little bit of a strong move away. We came close to it. We moved away. We're coming back to it again. And I'm just going to leave this one alone. I'm not going to add anything to it. I still think the level is valid because our 4-hour chart is very sideways. So with the 4-hour side, Dwight, with the 4-hour sideways price action, that tells me that that's typically a topping pattern and very well could be a topping pattern. So while I'm not taking this level away, I'm also a lot less confident that it's actually going to work. I am comfortable with this area up here for a reversal, however. Very comfortable with that area for a reversal. All right, let me share this one. Now, remember, and I said this before, for a lot of you, I look at 20 markets every day. Do you think I take trades on all 20 of these markets every day? Hell no. No. I mean, you've got to find the markets that fit your style and your main setups. My 4 main markets are S&P, Nasdaq, crude oil, and gold. And then after that, it's probably the Russell, the Aussie, the Euro. Those are the main ones that I pay attention to. But S&P, Nasdaq, crude oil, and gold they're like the 4 horsemen of the trade apocalypse. That's what I look for. And so when looking at these markets, don't overwhelm yourself trying to trade all of them. And certainly don't get FOMO. Don't get the fear of missing out because you look at too many things. That's also something to consider. All right. Next, looking at our ags, we had on the soybean trade yesterday that we talked about, we did get basing here in front of the level and a very nice breakout. So we did get a decent breakdown from that area. When looking at this, we had a touch here, base, a touch here, moved up, and then broke down through. If you didn't get it, I'm going to put a retest line at that level for price to come back into that zone. If you're still in it, you've got some room to run on the daily chart down to about this region here at 1121. Corn yesterday gave us an opportunity for a little breakout. I actually got a text message from a member yesterday asking if there was a breakout here below this 424. I was okay with it, and if you missed the breakout, the other area that I had looked at was on the 15-minute chart. This little wick over wick. Now that wick over wick never gave us a retest to get us back in. We then came to the confirmation long and just blew right through that son of a gun like a knife through butter. And so now I would look up here as the potential reversal trade as we come off this little 15-minute area. So we are seeing a pretty strong sell-off in our commodities and almost back to our breakdown line. Wheat, looking at wheat, we did get a strong move down in wheat. If you took this, basing was very close to the level, not exactly immediately before the level, but close to the level, giving you the reasoning to take it. If you took it, it's still moving down. If you didn't take it, I understand why. Basing was not immediately before the level. It still would have scored a 9 out of 10 because that occurred right around a market open. So still okay based on our trade optimization plan scoring sheet. I would look to the next breakdown to be below here, where you've got room to run down to 557. So you're in a point where all of these commodities are showing weakness, and there continues to be room to run down. Bean oil, I just love the word bean oil. If I look up a bit higher to this area here, that lines up with our corn supply area as well. Okay, so those are our agricultural markets, the ags, if you will. Zoom in on that. Let me share this grid. All right. So let's move over to our next major market, our currency markets. So we looked yesterday at the currencies, talked a little bit about some bullish opportunities inside the currencies as well as some bearish opportunities in our bonds. We didn't get that basing immediately before the level. Again, like we talked about in the other markets, it was close, but not immediately before the level. So if you missed this one, don't feel bad about it. You followed the rules. That's okay. You're going to miss opportunities when you follow the rules the right way, but it's also going to keep you out of bad trades by following the rules. Looking at this on a 4-hour, we are seeing that this is, continuing its move down at a fairly slow clip. And perfect, Dennis. Love it. All right. Next, let's take a look at the ZB. So looking at the ZB, which is our 30-year, we have a little bit of a potential better breakdown here than we do in the ZN. So could get a breakdown in this region. Obviously, the better level is going to be the more obvious one up here, but I'm going to take just the wick over wick below the pivot. Not the whole thing, although stop goes above the pivot. Looking at the euro, so here's our euro position, and we had talked about the fact that these currencies were looking pretty bullish a couple of days ago. I think it was was it Sunday night or was it Monday? Whatever day it was, we talked about the fact that our currencies overall were looking rather bullish. And so this area of demand off of here was able to get us to a new high. And so I don't know that we're going to make it all the way back down to there. So I would look for a stalling point back in here for a reversal, which is this old area of resistance. Oh, Dennis, that's not a way to think. And then the Canadian dollar yesterday, we looked at the fact that we may get a little breakdown below here. It never really broke down, but I think that's still valid. And we are definitely slowing down in our upward move. So let's keep that breakdown as a potential. On a pullback, once again, I don't have a lot of great areas here on a pullback to get long at this point. All right. And last, but certainly not least, currencies numero dos. Starting with the New Zealand dollar. So in our New Zealand dollar, we had taken a look at this area here for a potential move higher. We did get a little bit of a move higher, and then it kind of stalled out, right? Didn't do a whole lot after that. We did get a little breakout, a little move higher, but then it kind of stalled. So it gave you an opportunity to take some money off the table, or at the very least, move your stop to break even. Coming close to an area of demand right now, we didn't get filled, and we're starting to make a move away. So with that being the case, I have to switch this to a confirmation, unfortunately. Aside from the fact that we were able to get a new high off of this level, I wouldn't normally because I think it's a retest of this area here to the left. So, yeah, it is interesting. And Lee, and I've said this for a while about the vaccine. My thoughts on the vaccine approvals is that the vaccine approvals are already baked into the price. They're already baked into the price. Matter of fact, I think when we see the FDA approval, you're going to see some profit taking. And so if you see some profit taking when that vaccine approval comes out, then I think you may see markets actually pull back a little bit before then rallying higher. So I see the vaccine approval and announcement and the distribution of the vaccine actually as a short-term bearish signal because I think that the market has priced in that vaccine for months. I think mine's a little shaky this morning. I think that's mine this morning. It's a little shaky, so I apologize for that. There's nothing I can do. There's nothing I can do about it, unfortunately. So, do you ever measure gaps between RTH on commodities? The answer for that to me would be no, Dion, because I don't know what you mean. I don't even know what RTH is. I'm sorry. I don't know that abbreviation. Oh, regular trading hours. I'm sorry. So that should tell you that I never do. And so because I don't even know what that abbreviation is. No, I never do. And the reason for that is because 20 years ago, the regular trading hours mattered a heck of a lot more than they do today. Because we're looking at a 24-hour market where the computers are always turned on. And so, yes, you get a lot more volume in regular trading hours. And so I am not looking at the gaps between regular trading hours on commodities or any of them because the machines never turn off. And that's really the biggest reason. And then if you were paying attention last night, you got a Batman cowl here. You guys remember I called this the Batman cowl, where you have those two upper wicks that are really close to each other. It looks a little bit like Batman's head. And then that's usually a pretty bearish sign, right? The Batman cowl is normally a little bit of a bearish signal. So I'm going to look to this area here for a potential reversal on the 15-minute chart. Yeah, the bots don't sleep, which is why I just don't even look at just, the regular trading hour session. I believe that is there some still people that use it and validity to it? Absolutely. So set to only trade once there's a certain amount of volume that has happened, right? So it's an automatic trigger. Always think about what are the automatic triggers that are causing this movement. In the Japanese yen, we got a little poke below yesterday without really a third touch, and so it wasn't the cleanest of levels. If you took it, it's actually moved down a little bit from that area, but I think you're better on a reversal back up into this region here. And then the Aussie is telling me to stay away, don't do anything. It's really what it's telling me. When I look at this on a 4-hour chart, I'm in an upward trend, but my last area of demand was unable to create a new high, which is typically a sign of weakness. But I don't have a setup for a breakdown or anything as of yet. So there's really nothing for me to do inside of this Aussie market. Well, the bots are allergic to tryptophan. And so as the tryptophan settled in, the trading algorithms settled in for a long winter's nap. All right. All right, so those are my levels that we have in there for today. I've posted those up to the trade updates page. Corey and I were busy the last few days. Doing a tremendous amount of back-end work, and so I apologize that we haven't as many updates go in. We were doing a lot of back-end work, and so some things that I had set up throughout the day that we were able to get into, I just didn't have time to put in the updates, so I will work on getting some more updates in today. Oh, I did get a text about a trade I'm supposed to check, so hold on a minute. Let me text this one. It was, I didn't want to forget. Hold on. It was a breakdown on the USD CHF. So let me open this one up. At 89.84. Well, that was a good breakdown at 89.84, right in this level here. We didn't get the prerequisite basing in order to make it a quality breakdown. I'm not sure if you took that one or not, brother. So let me know if you're able to get that one. And then, because it definitely didn't give you the basing required for a breakout. It was the right setup. Yeah, it was as you should have been waiting for the basing. Now, on a 15-minute chart, you could have justified, hey, listen, that basing is close enough. I'm willing to get in. But on the hourly chart, we certainly didn't get it. I think, though, if you get a retest back up to that region, you could be very quick to make that move. Looking at silver. some levels that we thought were going to be some decent areas of supply. And those areas of supply on a 4-hour chart, we really started to make a strong move higher. So on a 1-hour, on a 1-hour, I go back to this area here as my most obvious pullback entry for a long, but it's not as clean as this one down below. So you've got two areas of demand here. The lower area, frankly, being a cleaner and better level for entry. Just don't know that we're going to make it to there. Now, as far as above us, if we get basing below here, we've got two touches. All right, 1, 2. Basing is there, for a breakout if you decide you want to take that. And this area of demand right here was able to get us a new high. And so since that area of demand there was able to get us a new high on a smaller time period, you might want to look at this region here for a potential reversal. So, all right. Well, hey, I apologize, by the way, that if my stream kept cutting in and out today and my internet was a little wonky. I don't know why that is the case. I have no control over the flow of the internet coming in and out of my house, but I do the best I can. If you guys have any questions, as always, please shoot me an email, chuck.fulkerson@tradersarmy.com. Do me a favor, hit the like button, hit the share button, share this feed out with others so that they can see what it is that we do here every day. I look forward to talking to you all soon. Tomorrow, remember, no daily market commentary tomorrow because we're going to be in the live trade room. So a lot more interaction, a lot slower. We go an hour instead of 30 minutes, and so we can spend a little bit of time. So appreciate you all so much. I hope you guys have a great day. Thanks for being here. See ya.